Good morning and welcome to Stock Market Today for Thursday, October 18th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan_Russo_CMT. I'm also on StockTwits under the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and Stock Charts TV, and you can sign up to receive a free email to follow along with this show by heading over to chaikinanalytics.com/today. So markets were lower in Wednesday's trading after Tuesday's big rally, with commodity sectors and consumer discretionary as the biggest laggards, while financials led. Treasuries were weaker, and the dollar saw gains against the euro and sterling and was stronger on the yen cross as well. Gold finished down 30 basis points, and WTI crude was down 3% after a larger than expected U.S. inventory build, settling down below $70 for the first time since September 18th. Breadth on the New York Stock Exchange was negative 1.7 to 1. Breadth on the NASDAQ, negative 1.4 to 1. Again, your outperformers, financials, telecom, and consumer staples, while materials, energy, and consumer discretionary were your laggards. And as we arrive at the desk this morning, S&P futures are down 20 basis points after U.S. equities finished mostly lower on Wednesday. Asian markets were mostly weaker overnight. China, the big decliner, again down nearly 3%. European equities are mostly higher. Treasuries are weaker across the curve, pushing the 10-year yield to 3.21%. Dollar is weaker versus both the yen and euro. Gold is off 10 basis points, and WTI crude extending lower, down by 80 basis points. And when we dive in and look at the S&P 500, I guess the constructive comment is after the big rally on Tuesday, markets sold off yesterday in the morning and then rallied back to finish near the highs of the day, reversing earlier losses. Support comes into play at 27.67, which is the 200-day moving average. And then in that zone we've been highlighting in the 27.10 to 27.20 area. Resistance is 28.25 and 28.52, which are the 50% and 62% retracements, respectively, of the decline from 29.40 down to the lows near 27.10. RSI continues to move up from oversold levels. Chaikin money flow indicator does, however, remain bearish. So we're watching the key levels here as the market kind of feels it out following the sell-off. Continued strength higher obviously would be a positive, and to see if we can get back above the all-time highs, and that key resistance zone in 27.10 to 27.20 really is important to us. We think a break of that zone would open the door to 26.50, which would mark the 10% correction from the highs. Now, your market in a minute. Here's what we're talking about in the note today for Chaikin Analytics members. Stocks reverse early losses to close near the highs of the day. We touched on that. Global markets do, however, remain under pressure. And that's something that we're keeping an eye on to see if weakness around the globe spreads to our domestic markets. Right now, we seem to be holding up, but we will keep an eye for signs of weakness. The XLK is beginning to lead the SPY once again, and we think that's important. Breadth indicators near levels which have marked tradable lows in the past. And as I said, futures do point to a lower open. So checking out the power bar ratios for the major indices, continued improvement for the Dow, 5 bullish or very bullish stocks, 1 bearish or very bearish stock. That index was down, or that average rather was down 37 basis points. As we said, S&P 500 finished virtually unchanged. 70 bullish or very bullish stocks, 88 bearish or very bearish stocks. The NASDAQ slight outperformer. Again, we said that tech was beginning to lead, and this is a key reason why. Up 4 basis points, 20 bullish or very bullish stocks, 19 bearish or very bearish stocks. Small caps resume their underperformance, at least for the day, 187 to 471 on the bulls and bears. Bonds down, yields up. Financials did have a nice day yesterday with some of the banks reporting. They were up over 1%. 3 bullish or very bullish stocks, 1 bearish or very bearish stock. And according to the Chaikin power bars, small cap stocks are more bearish than large cap stocks. Major indexes are, in fact, mixed. Now, stock of the day, I mentioned that email earlier. If you're following along, we generated a stock idea for you to consider every day based on the Chaikin Power Gauge rating. And today's stock is MGIC Investment Corp, affectionately known as Magic around the street. Ticker symbol MTG, closed at $12.99. yesterday, up 2.61%. Comes to us from a group that we like, the insurance part of the market. And the Chaikin Power Gauge rating for Magic is very bullish due to very attractive financial metrics, very strong earnings performance, and positive expert activity. And if we dive in and look at the chart, we start with the strategic. Is this the type of stock we want to consider on the long side? And I would think the answer is yes. Very bullish stock, strong trend, strong industry. Ribbon at the bottom of the screen tells us where that power gauge rating is and has been over the past year. And you can see we've been either, bullish or neutral throughout the past 12 months. We are currently on that very bullish rating, and the dynamic duo is in gear. The market and the model are in agreement as the stock has been outperforming relative to the S&P 500. Currently oversold based on our overbought, oversold indicator. And Chaikin money flow, while bearish, has been kind of since the summer exhibiting a little bit of a personality change. We've gone from intense bearishness to kind of dancing around the zero line. I think that this is constructive in and of itself, this reversal. You can see how intensely bearish the money flow had been, and now the money flow readings, when they do become bearish, are less so. Stock is above the long-term trend line and did trigger a relative strength buy signal in Chaikin Analytics today. I think it makes sense to consider ticker symbol MTG as a long idea, as the setup does in fact look compelling. It's one of the few industry groups that is still strong despite the market sell-off. So take a look at MTG today. Looking at our sector tracker now, movement of the major sectors of the market over the last 5 days, and the rebound that we've seen has really led to some strength here in the risk-on type sectors of the market. Communications up 4%, technology up 2.78%, healthcare been a leader, up 1.33%, discretionary even coming on, up 1%. Staples, middle of the road. Energy has been really the underperformer here, as well as real estate and industrials. Energy hard hit by the decline that we've seen in oil of late. Turning now to our industry in focus, and that is the Aerospace and Defense Services Group, which over the past 6 months has outperformed the S&P 500 by 4.8%. However, its power bar ratio, which measures future potential, is weak, with more bearish than bullish stocks. It's currently ranked kind of middle of the pack, number 9 of the 21 subsectors that we looked at, and it has moved up 5 slots over the past week. We can see that there are 3 bullish or very bullish stocks and 7 bearish or very bearish stocks. Some of those indicative names on the bearish side: BWX Technologies, ticker symbol BWXT, Axon Enterprises, ticker symbol AAXN, and National Presto, ticker NPK, all with very bearish Chaikin Power Gauge ratings. And as we dive in on one of them here today, we can see that BWXT is the type of name that we want to avoid on the long side, and maybe even potentially look at opportunities for a bearish trade when the situation is right. What I mean by that is, strategically, this is the type of name we want to avoid. Very bearish stock, weak trend, weak industry group. Ribbon at the bottom of the screen, again, tells us where we are and where we've been from a power gauge perspective. And we can see we are on that bearish or very bearish reading, and have been really since May. Stock's been underperforming the market since June, and the intensity of that underperformance remains in place. Market sell-off did induce an oversold condition, however, by our overbought, oversold indicator. Chaikin money flow is bearish. Stocks had a little bit of a rebound here. I think it makes sense to add BWXT to a bearish watch list, keep an eye on it, and all else being equal, if everything remains in place, when this stock becomes overbought or nears an overbought condition, it kind of opens the door for an opportunity to enter a trade to the bearish side, whether an outright short position or using options. Keep an eye on BWXT for an opportunity to enter on the bearish side of the trade. Looking at what's trending now, yesterday's S&P 500 movers and shakers. On the gainer side, United Airlines up nearly 6% following their earnings. Netflix, a bearish stock, up over 5% following their earnings print. Investors like what they saw on the user growth. However, this stock did give back some strong earlier gains. USB, a financial company, investors like what they saw there on the earnings side, as well as with Goldman and Morgan Stanley. All three of those names neutrally rated. But we'll see if these positive earnings surprises and the positive reactions to the stocks can lead to a bit of a rebound in the financials sector. On the loser side of the coin, IBM down 7% following their print. AutoZone and AAP both hit hard. AutoZone partnering with Walmart. So Walmart entering the space led to some fear there for the traditional auto parts retailers. Campbell's Soup, there's an investor group who is supporting the current board, and that can put a wrench in the works of some of the takeover activity that's been rumored there. And Northern Trust was a financials company that reported earnings. That stock down over 5%. Kind of an outlier, though, relative to what we saw over here with USB, Goldman, and Morgan Stanley. Our earnings update now, as we said, USB beat by 2 cents. Abbott Labs beats by a penny. M&T Bank, another financial, beats by 21 cents. Crown Castle beats, as does Kinder Morgan. Turning our attention now to the important names that are reporting today. Before the bell, neutrally rated Danaher and Dover will be on watch list. BB&T, another financials company that will be keeping a close eye on. Textron's numbers are out. Market not reacting well to them. Stock was down 10% in the pre-market. PPG is the bearish stock that reports before the open. Chaikin suggests caution when holding bearish stocks into earnings. After the close, some important names on the financials and fintech side of the coin, as well as ISRG. So PayPal on fintech, ETFC financial, American Express financial. We'll hear what they have to say. And ISRG has been a strong name within the healthcare group. We'll see what they have to say following their print, and as always, how the market reacts. We'll keep an eye on these names following the close tonight. So turning now to some of the key themes that we're focusing on today. We look at breadth on Thursdays, and when I consider breadth, I like to consider how overall markets are performing as well, especially outside of the U.S. And this is the iShares MSCI ACWI ex-US ETF, and we can see that it's really been under pressure since making a high in January, below the 50-day moving average, below the 200-day moving average, both turning lower. RSI solidly in bearish ranges, and Chaikin money flow is in fact bearish. I look at 33 different country ETFs, including the U.S., and currently only 3 of them are above their respective 200-day moving averages. So it really is, the U.S. has been the bright spot in terms of global markets, and what we want to do is watch for signs that global market weakness is spreading into the U.S. Right now we're holding up, but obviously we'll be doing the work and keeping an eye on things abroad for you as well. As I said, XLK beginning to lead the SPY once again. Technology's been a strong leader. Really hard hit, though, with the market sell-off that actually induced a slight amount of underperformance, and we've regained that line that marks under and overperformance. Fund is currently oversold based on our overbought, oversold indicator, and this week we rolled out our power gauge ratings for ETFs, and XLK does have a neutral but positive, neutral plus rating. You see here that the oversold condition and the sell-off brought us below the long-term trend line, but I think a stabilization here and outperformance by tech is important for the bulls. We'll continue to monitor that for further signs of improvement. And as I said, it's breadth day, and some of the breadth indicators that we look at are rebounding, and some of the other ones, like the percent of stocks above their 20-day moving average and the percent of stocks making 52-week highs, have actually reached oversold levels that have marked tradable lows in the past. This is the S&P 500% of stocks above their 200-day moving average, and you can see we've regained a nice amount of what we lost in the sell-off. So we'll continue to look for improvement there, if as the S&P moves higher. So that's it for today. As I said, you can sign up to get daily stock ideas for free. Follow along with this show. Head over to ChaikinAnalytics.com MGIC.com/today and help us spread the word. Please share our link and what you're learning on this show on social media. We always appreciate it. I hope everybody has a great day, and I'll see you here tomorrow, same time.